Tesla update before we dive into markets. Tesla just dropped two cryptic teasers on X and stamped them with 10.7 this Tuesday. One clip shows a metallic turbine-like object spinning with a Tesla logo. Another shows twin headlights into dark. It's classic Tesla misdirection, but the street's read is clear. We're about to see the more affordable Model Y variant that's been rumored for months. What we know, not guess. Multiple outlets report Tesla is teasing a Tuesday reveal. Reuters frames it as a pivot toward a more affordable EV, likely a decontented Model Y. Simplified build, cheaper parts, faster to scale. Barron's adds that the shares popped 4% today on the teasers, so the market is already leaning bullish into tomorrow. Why this matters? If it is the more affordable Model Y, reporting suggests Tesla's target is 20% lower production cost versus the refreshed Juniper Y, with potential to scale toward 250,000 units per year in the US by 2026. That's a big deal for mix, capacity utilization, and price elasticity at Tesla's current volumes. Execution here could reaccelerate unit growth without waiting on a brand new platform. What I'm watching at the reveal. 1. Price and trim strategy. Does Tesla slot this at or near the rumored $40,000 base, even if that's a placeholder? And what gets removed to get there? Interior materials, sound system, sensors. Rumor mill has tossed around $40,000 for a standard Model Y, but that's not confirmed. Timing. Are US deliveries starting this quarter, or is this a soft unveil into Q1, Q2 ramp? 3. Factory and scale. Is the main ramp awesome with Explorer to Fremont, or do we hear about Mexico and others? Scale guidance is the tell for margin math. 4. Positioning versus Model 3. If Model Y dips closer to 3 pricing, does 3 get repositioned again, or does Tesla lean on features and range to keep separation? 5. Curveball risk. The spinning part could be misdirection toward Roadster or something hardware adjacent, but consensus remains affordable Y. I'll treat anything else as upside surprise. Market setup into tomorrow is stocks green into the event on speculation. If we get clear pricing, near-term deliveries, and credible scale, bulls will argue this reopens Tesla's volume story heading into the year-end. If we get vague timelines or purely a teaser for something not near production, that's where the sell news risk shows up. Next Tesla update. Elon says FSD v14 starts rolling out today, but only hardware for cars at first, with v14.1 targeted 2 weeks later and a further 14.2 after that. That's the stated timeline and is fueling hype into Tuesday. This follows a weekend delay for a last-minute bug, which Musk claims let the team squeeze in a few extras. Expect a phased release, early wide, but not everyone at once, and watch for the usual stagger for region and VIN ranges. Who actually gets it now? Reports point to hardware 4 only at launch. If you're an older hardware 3 car, don't expect V14 today. You'll stay on the V13 branch until Tesla says otherwise. Check your car. Control software check for update while on Wi-Fi. What could feel different? Ahead of V14, Tesla quietly tweaked driver monitoring strike rules, now forgiving one strike roughly every 3.5 days without a new infraction. This suggests Tesla is preparing to ease supervision friction while still requiring an attentive driver. This is still FSD supervised, not autonomous. The promise and the salt. Musk is talking up fast follow-ons. 14.1, then 14.2, that almost feels sentient. Ambitious, but timelines have slipped before, so the real signal would be owner videos and intervention rates over the next 48 to 72 hours. Investor angle into Tuesday. A visible hardware 4 wide push today, plus concrete progress clips tonight as a bullish setup into the Tease October 7th announcement. But if availability is narrower than implied, or if early drives look messy, you can see the sell-in news wobble after today's run. Keys to watch tonight. 1. Hardware 4 coverage. 2. Edge cases. 3. Driver monitoring behavior. 4. Follow-on through 14.1 timing. Now the market pulse. The Nasdaq is leading this morning as AI euphoria outweighs shutdown jitters. The catalyst is AMD ripping 20-30% after unveiling multi-year OpenAI partnership, and that strength is pulling up the broader chip complex. What happened? AMD and OpenAI struck a deal to deploy 6 gigawatts of AMD Instinct GPUs, starting with 1 gigawatt in 2H 2026. OpenAI also received warrants for up to 160 million AMD shares, or roughly 9 to 10% of the company if fully vested on milestones. milestones. That structure underscores how strategic OpenAI views AMD as the second source to NVIDIA. Tape check. AMD is the day's point of the spear. Semi stocks brawl a bit. Think Marvell, Micron, Supermicro, Palantir, and even Oracle. The Philadelphia Semi Index is printing fresh highs, while NVIDIA is a touch red on competitive read-throughs. Dow's lagging, Nasdaq and S&P are green. Why does this matter? 1. Capex visibility. 6 gigawatts is real money. Validates multi-year AI capex beyond the hype cycle. That's supported for equipment, memory, networking, and foundry names, not just GPUs. 2. Second source narrative. If OpenAI proves it can scale on AMD hardware at competitive price per performance, procurement chiefs everywhere get leverage versus a single vendor stack. That's a multiple expander for supplier across the chain. 3. Macro overlay. Markets are looking through the ongoing federal shutdown, but keep in mind, delayed data and policy uncertainty can sting risk sentiment if the stalemate lingers. While I'm watching into the close, follow through breadth. Do semi-adjacents keep up? 2. NVIDIA and AMD pairs. Does NVIDIA dip stay shallow? 3. Rates and shutdown headlines. Any move in yields or a whiff of a funding breakthrough can flip. Bottom line, today is an AI-led risk-on session with AMD as the spark. Your turn. Which side benefits more from the deal? Shutdown check-in. As of Monday, October 6th, we're on day 6 of the federal government shutdown. The Senate is back in session with no deal yet, and several agencies are partly closed or running skeleton crews. Roughly hundreds of thousands of federal workers are furloughed on working without pay, keeping pressure on leadership to cut a deal. Human impact in front of center. WIC, the Women, Infants, and Children program, supports 6 million low-income moms, babies, and young kids with formula, produce, and staples. It's running on a limited contingency fund that experts say could last about 1 to 2 weeks. After that, states will have to backfill or benefits could pause. Some states say they can bridge briefly. Others warn they can't. That's why you're seeing WIC in every headline today. What stays versus what slips. Essential services continue, but a prolonged shutdown means more service disruptions and widening economic spillovers. Advocacy groups note SNAP October payments should still go out, but WIC is far tighter on cash flow, hence the urgent tone from state health departments. Politics and path to a deal. Leadership is trading blame while floating dueling stopgaps in the Senate, none with a clear 60-vote path. This dispute set involves healthcare, ACA subsidy provisions, and broader spending levels. Meanwhile, the White House is escalating rhetoric on potential layoffs if talks stall. What to watch in the next 24 hours? WIC continues to count down, Senate vote math, federal workforce stress, and markets data flow. Bottom line, the headline risk today is WIC, a near-term fuse that turns abstract politics into kitchen table reality.